So in yesterday's live recap, we talked about the bearish disconnect between the Nasdaq and the S&P and the relative weakness in the mega caps and how that could result in a 40 to 60 point pullback into 5660. And that specific idea has now played out in the overnight session. We saw liquidation and a move down into the 56.4975 to 56 quarter area. The equivalent of the zone was tested yesterday in NQ, and NQ has also continued its sell-off. So heading into the open, we know that the sell side is more dominant on the day time frame. Now, as far as our directional bias goes, the intermediate and bigger picture bias will remain bullish, and our short-term bias will continue to be neutral, because even though the S&P has been quite weak in the overnight session led by the Nasdaq, NQ is now testing another significant area of support at 20,205 to 275, and as long as that area holds in the Nasdaq, we could find stability in the S&P as well. Now, that may mean that ES has to go lower to find responsive buyers, but if NQ holds 20,205 to 275, then ES could also find buyers at one of its own support zones and then begin consolidating and balancing in a range yet again. And that's why our short-term bias will continue to be neutral, but with the understanding that the overnight session has been quite weak, and if we had an overnight bias, that would clearly be bearish. Now, on the upside, we have aggressive resistance at 56.65 quarter to 68 quarter, and continuing to hold below that area would be a sign of continued weakness. And then above that, we have the pre-market resistance zone at 56.73 to 83, and ideally, sellers hold ES below pre-market resistance. If the market is truly in a very weak state where we're going to get continuation to the downside, then we don't really want to see a large retracement or bounce on the day time frame. So if this overnight bearishness is going to remain in play and result in a move lower, then ideally we want to see sellers holding ES below 56.73 to 83, and a breakout above that area would be the first notable sign of intraday strength. And then we have the initial resistance zone at 56.85 half to 95 half. That is the intraday bias changing zone. So that is the most significant short-term resistance zone. Now again, if the overnight bearishness is going to remain in play, then we should get nowhere near 5,700. Even if we get a strong intraday bounce, sellers should defend at the initial resistance zone. And again, ideally, sellers are active at pre-market resistance and the market holds below that area. On the downside, we have initial support at 56.4975 to 56 quarter, and a break and hold below that zone would serve as an intraday bearish confirmation, and that can then result in a test of 56.40 half to 44 half, as well as 56.26 quarter to 36 quarter. And by that point in time, the market would begin exhausting the range potential of the day. So buyers are likely to be active on first test of 56.26 quarter to 36 quarter, and then the 56.1075 to 21 quarter zone marks the range extreme. So the lower the market pushes, the higher the odds of buyers stepping in, especially if NQ is still holding 20,205 to 275. So that is the market context and plan heading into the open. Let's see how the real-time situation shapes up and how the market behaves at the aggressive and pre-market resistance zone. That'll tell us whether we are dealing with a truly weak market, and we'll take it from there.